right? Okay. So here we Yes. Here you can see there are 7 steps for doing this or for making the sales and cost plan. So normally this sales and cost plan shows the sales, cost and the profit of the business. So if you are going to start a business, you should have the clear idea about how much sales that I'm going to make in the forthcoming months or in the future years or future months. How many or what kind of sales or what kind of cost I'm going to have for these our business. So first one is you have to forecast the sales for each month for the first year. So if you are going to start the business in 2025 January, so you have. Sorry for the disconnection. Okay. So first, as we discussed, so we have to forecast the sales, then we have to forecast the direct material cost, then the total direct material cost for the each month for the first year, then direct labor cost, total direct labor cost, then indirect cost. So the obvious thing is we have to calculate the cost for each direct material, direct labor, and indirect cost for each month for the products. And we have to complete the sales and cost plan. So we'll be seeing one sample for that. Yeah. So here you can see the Fresh Bread Bakery is one of the organization. They have mentioned their sales and cost plan. So you could able to see a 12 months period from January to December, and they have calculated the sales, the forecast sales, direct material cost, direct labor cost, then gross profit, indirect cost, then net profit. So the normal thing is for calculating the net profit, I hope that you have studied these basic things in your financial accounting in the first year. So you have to, so how are you going to calculate the net profit? Here, how they have calculated? The simple thing is we have to, so anyone, anyone. So simple thing, what is our normal gross profit formula or formula? What is the normal simple? So sales minus direct material plus direct labor. So we'll be getting our gross profit, gross profit minus indirect cost. Okay. So this is how they have calculated the net profit. So as these are basic things, the main objective of this unit is you have to identify what is the format of the sales and cost plan. So that is the thing that you need to know. So this is one of the sample for the sales and cost plan. Okay. Okay. The next one is the cash flow plan. So normally in the accounting, we have studied about the cash flow, right? So LK7, we have studied those things, but here we are not applying any standards or format. We are not applying any standards. We just need to identify what will be our inflows and outflows, and we have to plan according to that. The definition, you can see the cash flow plan is a forecast which shows how much cash you expect to come into your business and how much cash you expect to go out of your business each month. So this will help you to make sure that business does not run out of cash. So the ultimate objective of every business is maintaining of their liquidity, right? So how much cash they are having at their hand for their requirements. So that is our ultimate objective. Along with the profitability, we should maintain the liquidity, right? So for that, we are doing this cash flow plan. How are you going to do this? Will be in detail. So to make the cash flow plan, there are 16 steps. From steps 1 to 5, that shows about the cash in, which means the cash inflows. And from 7 to 14, it shows the cash out. How your cash is going to out from your business. So you can see these are simple basic steps. You don't need to think hard about these things. So there are 16 steps. So and also there is one example as well. Okay. So I'm going fast because yeah. So cash, step 1 is cash at the start of the month. So this is the amount of cash the particular company is having at the initial of their business or at the start of the month. Then the step 2 is owner's investment. So normally when you're starting a business, someone is investing. Normally the owner, right? Owner is investing in his business. So that amount will become as a cash inflow, right? Then the step 3 is bank loan. So this is also one of the kind of capital which is being comes under the category of credit. Normally, the owner borrow money from the bank for facilitating his or her business. So that is called as bank loan. So that is also one of the cash inflow to the organization or the business. Then the other cash in is normally the cash from the sales. So after operating the business, some amount of money will come to your business as a sales income, right? So that is also cash inflow. And also the step 5 is, here they are referring these things as step 1 to 5, and then 6 to 1 to 5, then 7 to 14. So these things, no, they normally mention about the what are the cash inflows and outflows. And the step 5 is when you are doing the credit sales, on those times those creditors, oh sorry, those debtors will give the money to you after their period. So those types also comes under the category of cash inflows. Okay. Then the steps is 6 is, so after adding all the money received during the month period, so that shows the step 6. And then the step 7 is during the pre-operative period they expect to invest money on building. So which means when you are going to start a business in a period of time, you should invest in the money of location, which means if you are going to build a building or if you are going to rent a building, so on those times you have to give money for those access of that particular premises. So those expenses will be the cash outflows. Then the step 8 shows the pre-operative period to buy machinery. So this is obvious that if you are going to operate a business or start a business, you should have machineries. So in order to get those machineries, you have to buy those, or sometimes you do leasing. So during those times you have to give money for that, which means your cash will be out of your business. So this is also one of the cash out in your business, buying machineries or leasing. So that depends on your decision. Then cash out for the direct material cost, cash out for the direct labor cost, and cash out for the indirect cost. So this is obvious. If you are doing something, it can be producing, or you can, if you are buying something and selling, there might be definitely these types of costs. So which mean you are giving the money to get the material and produce and making that as a final product. So for that you definitely have to give some money for the for those activities. So all these activities will be comes under the cash outflow. So this is obvious. And then cash out for pre-operative investment. So there might be expenses that you incur when you are operating your business. There might be lawyer fees when you are registering your business. There might be other rules and regulations you have to follow when you're operating a bakery, right? So in those circumstances, you have to incur some kinds of cost. So those pre-operative cost also comes under cash flow, cash outflow. Then the step 13 talk about the loan repayment. So we have obtained loan, right? In the cash inflows, we have obtained bank loan. So in order to repay that, we have to repay the installment with the interest. So that is one of the cash outflow that comes under step 13. Then there are other kinds of miscellaneous expenses that you need to incur when you're running a business. Those also comes under the category of cash outflows. Then step 15 is you have to add all these total cash outflows. And step 16 is you will be able to find your cash at the end of the month. So you need to understand the basic thing is when you are preparing your cash flows, you should identify what are the cash inflows that I'm going to get in my business and what are the cash outflows. So in your mind, you have to categorize those expenses and you have to find the cash at the end of the month by deducting the cash inflows from the, sorry, deducting the cash outflows from the cash inflows. So we can see one example. So you can see cash inflows, cash outflows. They have calculated up to January to June in this particular table. The company name is Sarigama Hardware. And other thing is you can see what are the things that comes under these cash in, cash at the start of the month, initial cash, then owners. The owner is investing some amount of money. If the owner gets some loan, and if the business is getting some money from the sales, so they are adding these all things. So these are the forecast figures that they have estimated based on their analysis. Okay. So these are the total cash in. So if you add these things, you could able to get this. You can see. Then cash outflows, you can see pre-operative expenses, investment for building, pre-operative expenses in the sense I said, right? So when you are registering your business, when you are have to compliance to the rules and regulations of the government, you have to pay some amount of tax or other particulars. So those things comes under these pre-operative expenses. And the next one is if you are renting your building, or if you are buying a building, you have to out some cash. Then if you are buying machineries, you have to give some money. And for the direct materials, for the indirect cost, for loan repayment. So if you are paying taxes, so all these things, if your cash is going out from your business, so all those things comes under this cash out. So you should add these cash out. So if you are deducting these 300,000, 310,000 and 500 from this value, you will be able to get this cash at the hand. So this is simple. It's like your normal calculation of expenses or cash at the end of the month. So this is a simple thing. So here we are not applying any standards here. So in the standards, we are having categorization for the expenses, right? So we normally have the categorization when we are preparing the financial cash flow based on the standard. So here there is nothing about that. Simply you have to find the cash in items and cash out items, and you have to find the cash at the end of the month. Okay. The next thing is the startup capital. So it is obvious, right? So when you are starting something, it can be a small business or medium sized business or large scale business. You should have the startup capital, right? So when you are starting, you should have certain amount of money to do that or to initiate that business. So those types will be discussed in this particular topic. So you'll be talking about two things: the capital investment and working capital. So when you are planning your startup capital, you should have the clear idea about how much I'm going to have under the category of capital investment and working capital. So anyone differentiate the terms capital investment and working capital? So what do you understand about the capital investment? Capital investment? capital investment? So are you having lectures after 3:30 or at the noon time? So the thing is, still I didn't get the power. So so I couldn't get the reply from the rep. So anyone, can you give me a time for today? Tomorrow also. So there are certain things. So this might will help you for your assignment. So so what do you understand about this capital investment and working capital? So the capital investment is when you are buying an assets for the business that has a high value or last for a long time. So some businesses can be started with a low level of investment. So when you are starting a business, you should have the idea about what where you are going to start your business. For that, you need to have the premises, right? So normally we call these as business premises. So in order to get those business premises, you have to invest long-term capital. These types of investment are called long-term investments. Or we are not referring that. We normally call these as capital investment because you are getting the long-term assets for investing certain amount of money. So these types of investments are called the capital investment. So here you can see what they are referring. So if I'm logging out, please don't wait for me because I cannot log in again. Since my percentage is 15, I could not able to join again. So until that, I will do. Okay. So here you can see